Hey everyone, welcome back. Hope you guys are having a great Thursday. So we got a lot to talk about today. Obviously, we have Iris Energy providing some good news about adding some more miners. Hut 8, obviously the merger with US Bitcoin is basically solidified, so we'll take a look at that. And then we also have some bad news from Cleanspark. Their results for fiscal year 2023 weren't that great. We'll take a look at it. I'm a little upset with some of the things. We'll go over it, okay? And then we'll take a look at Bitcoin, what's going on with it right now. But as always, you guys know the drill here. This is not financial advice for entertainment only. Please do your own research. I'm investing in the following coins and companies for full disclosure. And if you enjoy this type of content, hit the like button, subscribe. Helps me out tremendously. All right. Let's see. Where do I want to... Okay. Here's what we're going to do. We're going to take a look at Bitcoin first, and then we'll get into the news stories that we do have here. We'll get into Cleanspark. I did listen to their conference call. So there's some notes on that I'm going to go over as well, and we'll get through this. So chapter's going to be down below. You guys know the drill. Okay, Bitcoin, excuse me, Bitcoin today was down. Well, now it's just down slightly. It's actually on the new day, I think, here. If we look at it on the daily, yeah, it's on the new day. So Bitcoin was down 0.35%. The miners were down in general for the most part. 90% of them were down. Cleanspark here in the after hours after they posted their quarterly results or fiscal year results is obviously doing a pretty rough job here going down, but kind of expected, right? They kind of put everything into Q4 numbers and it was pretty bad. We'll take a look at it nonetheless. But you can see here for the most part, the miners were down, about 4%, 1%, 12% for Annie was down quite a bit here. The only one that was up was Iris Energy. That's because they provided news that they're going to be buying more miners to get them to the 8.3 exahash. So that was good news there. Mawson was up 2.46 and everybody else here was pretty much down on the day. So it wasn't a good day so far. We'll see how things play out. Right now, Bitcoin's still battling with that 38,000 mark on it, which is kind of what we expect until it actually breaks above it, holds there, and closes above the 38,000 mark. In the meantime, we are going to be battling with that for, like I said, maybe a couple more days. Okay, so that's it for Bitcoin and the miners here as far as how they did today. Let's take a look at Cleanspark really quick here. So that one has had a pretty huge run up here recently in the last month. If we look at the monthly here for the month of October, it is up right now 52% on the month so far. So no surprise it's having a little bit of a pullback. The news, obviously, that came out today wasn't great either, so that's having a little bit of pullback. We might go down to around right now in the after hours is at 5.59. It may go down to like the $5 range to $4 range, something like that, which is fine. This is a long-term game on it, but we'll talk about all that when we get into it. Let's take a look at our first story here, which is going to be on Hut 8 and US Bitcoin announced completion of business combination. So this has been in the works for almost, probably a year now, I think, if not longer. And it's finally done with. We got some details when the share change is going to happen, on what date. We'll go over that. And then we'll obviously see if we can get some updates from them. So possibly we'll get an actual full month update for the combined business of December. We'll get that data in January for them. So we'll see how they do there. That'll be interesting to see the comparison. Okay, but here's what we have. Hut 8 proudly announces the completion of its business combination pursuant to which Hut 8 and US Data Mining Group, doing business as Bitcoin Corp, have combined in an all-stock merger of equals. The combined company is named Hut 8 Corp and is going to be a USA domiciled entity. Okay, so we kind of figured that was going to happen. We knew that all along. We are excited to move forward and continue growing with a pipeline of greenfield and brownfield opportunities, integration across the mining value chain, leading operational leverage and expertise, and diversify uncorrelated fiat revenue streams. This was from CEO Jamie Leverton. So this is all good. This is definitely something that Hut 8 needed. And then continuing on here, as a result of the transaction, Hut 8 common shares will cease trading on NASDAQ and the Toronto Stock Exchange prior to the open of trading on December 4th. As of the open of trading on December 4th, shares of New Hut common stock will trade on NASDAQ and the TSX under the ticker symbol HUT. Shareholders of Hut 8 received for each 8 Hut shares or Hut 8 shares held 0.2. So basically they got, it's like a 5-to-1 split. They received 0.2 of share of New Hut common stock, which effectively resulted in consolidation, Hut 8 shares on a 5-to-1 basis. Stockholders of USBTC received for each share of USBTC capital stock 0.6716 of shares of New Hut common stock. So they got a little bit less, you could say reverse split on that one than Hut 8 shareholders did. Going down here, New Hut has access to approximately 825 megawatts of gross energy across 6 sites with self-mining, hosting, and managed services. It has 7.5 exahash of installed self-mining capacity at 6 sites. You guys can read that. They do have a joint venture, which is called the King Mountain Joint Venture, in which Hut 8 has a 50% membership interest alongside a leading energy partner, the King Mountain JV. So that should be interesting, I think. As long as they have 50% of that joint venture, they should be reporting that as revenue and not as assets. Correct me if I'm wrong there. I don't know if it has to be 51% or not. But I think if it's a 50%, they have to report it as revenue. New Hut will manage 220 megawatts of hosting infrastructure at its King Mountain, Texas site, powered by a mix of energy, including wind and nuclear. Okay, let's see here. New Hut will manage 680 megawatts of energy under its managed services division, powered by energy from a mix of sources, renewable and zero emission in Kearney, Granbury, King Mountain. And let's see, this unique leading edge service offering gives Bitcoin mine site owners the opportunity to have experts manage all day-to-day operations, hosting, site management, and maintenance using purpose-built site management software. And then Jamie Leverton will serve as Chief Executive Officer of New Hut. Bill Tai will serve as Chair of New Hut's Board of Directors. And then Ashner Ganut will serve as President of New Hut. Mike Ho will serve as Chief Strategy Officer of New Hut. And Shenef Vizram will serve as Chief Financial Officer of New Hut. So that's going to be obviously interesting. I don't know if they're going to be, obviously, I would think they would lay off some people that are no longer needed, that are duplicate roles. So we'll see on that, how that's going to play out and how their expenses are going to be taken care of going forward. Okay, but this is good. This is obviously something that Hut 8 needed. They've had a pretty atrocious year so far this year. With a bunch of problems, lawsuits, sites going down, miners going down. So they definitely need this to move forward, I think. Okay, so that's news on Hut 8. Next, let's take a look at Iris Energy here. So Iris Energy increases mining capacity to 8.3. They're doing this by obviously buying more miners, and they have an expansion on track to get to 10 exahash. So this is part of that expansion. Key highlights here is 1.3 exahash acquisition of new generation bit main T21 miners, the 19 joules per terahash. These are the same miners that Bitfarms just recently announced that they were buying this week as well. So they're the same type. This will improve overall fleet efficiency to 25.8 joules per terahash, which is good. The purchase price is $14 per terahash. They're paying $18.6 million with 20% of that deferred until the following year. And then the self-mining capacity expanded to 8.3. So they have 5.6 right now. They're getting 1.4 exahash of the S21 miners, which they reported on earlier, and then the 1.3 that they just reported today. They are getting 7,000 of these miners, which those are supposed to start coming in, I think, first quarter. Let's see, the newly acquired S21 17.5 joules per terahash and the T21S 19 joules per terahash are scheduled to be shipped during Q1 of 2024. And once installed, will increase operating hash rate by 48% and then improve overall fleet efficiency from 29.5 joules to 25.8. So that is all good there. You guys can read on the rest of the stuff here. I did add the numbers here to my spreadsheet. If we look at it over here, currently Iris Energy has a market cap as of today of 329 million. And going down here, they do have some of the older miners here that are the 90 terahash and like the 95 terahash. Going into November, I'm going to take those out. So I already took those out here. I just need to take those out again in December. And while I'm thinking about it, I might as well do that now and just kind of fix things while we're looking at it. That way I don't forget, and that way I don't wonder what the heck's going on here. So I took it off for November. And the reason for that is that they are just not as efficient anymore. So I'm thinking, and plus with what they reported, I still have an 8.4 exahash. They're saying that they're getting into 8.3. So there might be an instance where some of the miners that I have here that have not been installed yet, like these 100 terahash miners, there might be less of those to be installed. I still have 640 petahash of those to get installed. That might be reduced down to only the 500 or so petahash left to install there. So that might be the issue that we have there. Other than that, yeah, we do have them at here at currently 25.5 if everything gets installed the way that they're saying. So that's right around where they're saying, about 25 joules per terahash. Okay, so this is all good news for Iris Energy. As you know, I am invested in them, so do your due diligence as always. But I think this is one of the ones that might end up being like the top 5 miners here going forward in the next year, maybe like the top 7 or something like that, depending on how fast they grow beyond the 10 exahash that they're planning to grow to. Okay, let me know what you guys think of this one. I think this was good news, but let's continue on here. Let's get into the main topic here, which is going to be obviously on Cleanspark. Cleanspark, Twitter was going crazy. Everybody was up in arms with the dilution and everything else. I didn't expect the dilution either, to be honest. I didn't think they needed it. At the last conference call that they had, they stated they have enough cash to get them to, I think at that point it was to the 16 exahash, and they reported they're getting to 20 exahash. So I thought they wouldn't dilute, but they did dilute quite a bit. They diluted about 21% based on my numbers here, but we'll take a look at all those. So not too happy about the dilution, happy about the growth nonetheless, but dilution. But there's also other things in the financial report that were kind of sticking points that really kind of got me a little bit, and we'll go over those as well. So here's what we do have. Cleanspark reports fiscal year 2023 financial results. Revenue grows 28% year over year. Annual Bitcoin production nearly doubles to 6,903, which is what I have them at as well. Fiscal year 2023 revenue of 168 million, net loss 137 million, and adjusted EBITDA of 25 million. So a lot of that net loss is based on the depreciation parts of things and like that, non-cash. We'll take a look at it nonetheless. But you guys can read the rest of this stuff here. I did listen into the conference call. So here's a couple of things that I took away from that before we get into some of the other things as well. So there's some good news, some bad news in here as well, and I'll go over it with you guys here. So here's what we have. All right, got my little cheat sheet here. Here's what we do have. So in order for them to get to 20.4 exahash, they would have to get an additional 72 megawatts added to the facility. So basically the Sandersville facility is tapped out, right? They need to install 50 megawatts in Dalton. They said it's going to cost about less than 5 million to build out the additional 50 megawatts that they need. The other sites that they do have would need to add an additional 27 megawatts. That leaves them with 42 megawatts that they need to find, basically. They did state that they have some things that are promising in the works. They haven't reported on it yet, but that should get them to the 42 megawatts that they need in order to get to the 20 exahash. So there might be some, well, they have plenty of cash right now, so maybe they won't dilute, but they could still dilute. Okay, so that at least is in the works. They know about it. Now we know about it because I was kind of debating whether or not they had enough megawatts at Sandersville. Now we know that they don't, so we can move forward from there. Next is, let me see here. So they need 30 megawatts, sorry, not 42. The 15 and the 27 gets them to 42 megawatts. They need total 72. That leaves them with 30 megawatts left. May go beyond the 20.4 exahash, which they reported, depending on where Bitcoin is, the price of the miners, things like that. They said that they are leaving that open. So they could go to maybe 24, 25, whatever, 30 exahash, whatever they want to go to. Let me see here. They're fully exited from their energy business. There was on the balance sheet, there was something reported on that where they took a hit on that one. And then as of today, they have 2,600 Bitcoin in their HODL right now. That's valued at approximately 100 million right now as it is. So that's good. The HODL continues to increase here. Let me see here. Part of the Q&A questions, Sandersville, right? When is that going to get energized? And they're saying possibly in February now. That's basically what they're waiting on with the electricity provider to hook up the lines to their transformers, basically, a substation. So if that gets done, we should be close to 16 exahash by February sometime, maybe a little bit after that, depending on when it happens. And then after that, we're looking at 20 point, whatever they're supposed to get to 20.4 exahash by the end of June, possibly. But that's dependent on them also getting other sites and building out the megawatts there, okay? So overall, that's not too bad there. Now, let's get into the spreadsheet here that I have, and we'll talk about some of those things that kind of irked me a little bit. So right now, let's get into, where is Cleanspark? Right there. So I updated the spreadsheet with the 184.7 million shares that they've now reported as having. That was a 21% dilution from the last time they reported it. And market cap right now is about 1.15 billion, right? We're taking a small hit here right now in the after hours, being down about 10%. That's still going to keep us probably above the 1 billion mark on market cap right now. You can see that the performance here has been really good here over the last, 1 week, 8 weeks, and the 12 weeks. It's all in the green here. So that's good there. We can see that the production, we go over these numbers here on the monthly basis, things to look at on the quarterly basis. So when looking at this stuff here, this looks good. I like seeing that the quarterly results or the quarterly revenue continues to inch higher each quarter, which is what we want to see, right? The Q4 numbers came in based on what they reported for the annual revenue, and then I subtracted the prior 3 quarters, so Q3, Q2, Q1 from that. We ended up with 52.46 million on that. And that is right in line, pretty much where I had them as far as generating revenue here. So I had them at 52.5 million. They came in at 52.4. I was up a little bit. I was up 0.21 from where they actually came in at. So pretty close. Love seeing that. And love seeing this continue to increase here. So the current quarter that we are in, I'm estimating around 64 million, depending where Bitcoin goes. Bitcoin could go south on us. That's going to change things. Bitcoin could go north on us. That's also going to change. Okay, so, but nonetheless, it is trending in the upward direction, which is what we want to see. Last 4-quarter operating costs minus depreciation, right? Take a look at this last quarter here. Based on the numbers, 55 points, almost 56 million right now. Huge increase from where we were Q3, Q2, Q1. So they definitely piled on a bunch of crap in there in Q4, right, for the end of the year. Basically, they gave themselves some bonuses, things like that. That got all added in Q4. That's why the numbers are pretty bad here on that. But generally, when we look at the numbers, they're actually not that bad. Cost to mine 1 Bitcoin minus depreciation. I have them at 16.2 thousand. They reported 12 point something per on the average per the year, and that's for their self mining where they don't have the hosting. Some machines are hosted, right? So those are actually a little bit more expensive to mine. But for the self mining, they said 12.6, which is fine, which is good, which is in line with what I had. And then for the quarter, obviously they came in at 16.2. So that's a little bit different, obviously, than what the 12 point something was. But it's okay because we're seeing the same thing happening with other miners as well in Q4, or well, for them it's Q4, but there was Q3 for other miners. We're seeing an increase in the expenses to mine 1 Bitcoin, right? As we're having the network hash rate go up, and you guys have seen my other videos on this topic as well, is it's, parabolic rise here. It's going to have an impact on the cost of mining a Bitcoin. So we're seeing that across the board, so I'm not too worried about that. Bitcoin mined quarterly here looks like a new record for them, 1,877 for the quarter. Prior best one was in Q2, which was obviously really good for them at 1,871. But overall, it is trending in the upward direction, so that's good there. Debt to equity, if we look at that, has been coming down here. It's up a little bit, but they're still way below the 1 mark. Current ratio, higher is obviously better. It's still really good. Not a big worry there as well. Total current assets, based on the Q4 numbers, is at 100.2 million. Total current liabilities inched up a little bit here to 74, almost doubled, I guess you could say, from where they were at 74. But obviously, they're buying a lot of miners, doing things like that. So that's expected to go up, especially when they reported those in Q4 for them. Okay, so that's all good there. I have no qualms about that. Going down here, we'll get into the metrics or some of the calculations that I do here later on. We talked about cash and current assets a little bit. They're 102 million right now. We did see a little bit of a, let's see here. What did we see the increase? I mean, these all pretty much stayed the same here. We got 29 million here, actually Q3, Q4 is over here. So 21 million prior quarter, 29 million now, so that's good. We saw prepaid expenses increase as well to 12 million from 8. Digital currency increased to 56 from 13, so they started hodling more, which is good, especially as we get into the bull run with Bitcoin. That's a good practice to have. And then hopefully they sell into it and out of it as well, and then prepare for the next bull run or bear market, build out in there, and prepare for the next halving event. Derivative investments went up a little bit here, and current assets held for sale, that's way down to 445,000 compared to 4.9 million. Total current assets or total assets increased to 761 million from 652, so that's good there. Not a big deal. And then when we look at total current liabilities, that doubled to 74 million from 37 million. We can see that the biggest change obviously was here. The accounts payable and accrued liabilities went up to 65 million from 29 million, and that's part of the miners that they're going to be buying and everything else. So that's why that is on there right now. Current portion of long-term loans payable actually went down to 6.9 from 7 million here, so that's pretty good. Went down about 80,000 or so. Nonetheless, that's good. Finance lease liabilities also came down to 130,000 from 168, so that's good. And operating lease liability went down to 181,000 from 194, so that's good. And then current liabilities for sale, that went up to 1.1 from 348,000. All right, so overall, total liabilities is at 84 million compared to 49. We know why. Miners are being bought, so that's the reason for it. Okay, going down here. Revenues. Revenues, like we said, have been increasing, which is good to see. But then when we look at the cost of revenues, that came in at 30 million for them. For the Q4 numbers, they were at 20 million. But this is explainable. This can be explained easily. This was mainly because they pretty much, if you look up here, their hash rate at the beginning of the quarter was at 6.7 exahash. They went up 9.6 to 9.6 exahash at the end of the quarter. So basically almost 3 exahash increase on that. So that's what, 50% increase from that. So we basically have a 50% increase on the cost as well there. That makes sense. So that's not a big deal. Dig down here. Revenue cost, there we go. All right, professional fees went down a little bit here to 2 million basically from 2.2, so that's good. Payroll expenses went way up here. So those increased by about 5.3 million, right? You can see the difference there. That's where I have a little bit of an issue with. General administrative also went up to 7.7 from 5, so 2.7 million there. Another 5.3, or yeah, 5.3 there, 2.7, 5.3, what is that? 8 million and a quarter of increases here. That's a lot. And I'm guessing since it's the end of their fiscal year quarter, that bonuses, things like that were added into that as well for the employees, for management, all that. So, I get it. You're a publicly traded company. You want to keep the good talent on board. I get it, but it's still frustrating nonetheless. So that kind of irked me a little bit. They should have just spread that out. Each quarter you do well, you build out, you do things, put it in there instead of dumping it all into the last quarter. Let's see here. What else do we have here? Gain on disposable assets, that went up to 2 million here. Other impairment expenses related to digital currency, 6.1 million there. That's the gap, right? I think that's the way that they have to do it for the accounting, gap accounting, I believe. That should be changing next year, I believe. So that should benefit them going forward. But right now, that's kind of a ding. Realized gain loss on loss of sale was only 595,000. Not a big deal there. And then depreciation and amortization, huge hit here, 58 million on it. So that's how we came up with. Cost of revenue was 121 million, right? Even if we take that out, cost of revenue minus depreciation, we came in at 55.9 million. And that would include just the general administrative expenses, payroll expenses, professional fees, and cost of revenue. They came in at 55.9. They only generated 52.4 in there. So maybe if they didn't have such bonuses at the end of the quarter here, they could have been profitable for a beta, I guess, if you look at it that way. Going down here, gross profit minus depreciation was negative 10 million, and percentage was negative 20% on it right now for the year. It looks like they came in at negative 0.6% on that one. What else do I have here? As far as numbers are concerned, let me see here. Interest that all stayed the same. That was up a little bit here. Change in fair value of contingent consideration, that was way down here. It looks like, so not a big hit there, but still. Total income expenses was 557,000, looks like. So that was actually an improvement from the prior quarter of 1.4 million. Okay. Looking down here, loss per share. What else do we have here? I think that's it. Yeah, so they lost 12 cents per the quarter, it looks like. That was Q3. Q4, I don't know, depending what number we want to use for the shares outstanding. If we use, well, we'll have to probably figure this out. I'll see if we can figure this out. But for the year, they're down $1.29 per share, based on only 102 million shares. The average is what they're using, basically, on that one. Okay. But the big thing, obviously, for me was the huge expenses here for payroll and general administrative. And then if we look back up here, we'll kind of explain things as well. Cost to mine one Bitcoin, like I said, was at 16,200. It was at 12.7 in the prior quarter here. And then what else do we have here? I wanted to point out for the year, I'm at 13.5 thousand on average here to mine. Bitcoin, looking down here, we talked about debt to equity, current ratio, covered that. Book to value ratio right now is at 677,000, or book to value equity. And then book to price to book ratio, 1.698. Enterprise value here is 1.2 billion. A beta of negative 10 million looks like. And EV to a beta is negative 110. Is it going to be 110,000 or 110? Ratio is negative 110. Okay. Looking at the revenue here. So general administrative plus compensation and payroll came in at 23 million. They generated 52 million. That was 44% of their revenue, basically, which is kind of high. It's definitely higher than where it was in Q3, which was 33.9% of it. And then if we look at just general and administrative expenses by themselves, you can see that that was in Q3 of 5 million. Obviously, this time around was 7.7 million. That was 11% in Q3 and now 14%. So don't like seeing that going up. Possibly even take a look at some of the other quarters here, how those stacked up here as well. Possibly just to get a reference a little bit here. And yeah, I mean, they're somewhere, I mean, some quarters they were really low at 6.8. They were at 12, 13, 10, 11. So they're averaging around, I would say 11 maybe or something like that. So don't like seeing that. We'll see how Q1 comes out for them overall. But the good thing is that they're growing, right? And like everybody here, well, everybody, I don't know if everybody, but I think a lot of people are obviously complaining about the compensation things. And I agree with you. It can be frustrating there. But the big picture that I'm looking at here, and this is the big picture, is they are growing. This is a long-term play. Obviously, you can try trading it and everything, swing trading it and like that. I don't have the patience for that. I'm not really good at that. So I dollar cost average in as best as I can. This for me was obviously always a play to get into a good position with the miners that I wanted to invest in, have as much as I can before the halving event, because historically Bitcoin has rallied really hard after the halving events, and price of Bitcoin goes up and price of Bitcoin goes way up. That's when things get really interesting in the miners, right? Well, at least the last historical event that we had, Marathon was up like 70x, Riot was up 50 some X, others were up 30, 40x, something like that. So we're hoping the same thing's going to happen again this time around, right? So it's not financial advice. You guys got to do your own research, but this is kind of what I'm doing. And then if we look at where they might be based on the numbers here going forward, if they get fully installed with the 20 exahash going forward, and Bitcoin goes up to 180,000 or potentially goes to like 286,000 or something like that. Some are saying it could go up to 300,000, 350, whatever it might be. But these are kind of the price targets here where I would think Cleanspark could get to, even with the latest number of shares that we have here, 184 million shares. Given that Bitcoin goes up to that price and the network hash rate goes up to, if we look at it, that goes way up here to, maybe this might be even too small of a number, 635 exahash by the end of, not the end of, but the middle of July of 2025. So that's kind of where we're looking at, right? Now, Bitcoin could peak before that even. We know that could happen. But usually historically, Bitcoin peaks around 12 to 18 months after the halving event. So that's kind of where we're looking at July, middle of July of 2025 is possibly the peak on that one. Okay, based on this, we're seeing, based on the numbers here, as long as the network hash rate grows where it grows, if it grows more, obviously they're going to be generating less revenue at that point. And if that happens, you can kind of dial these numbers down more, right? But we'll keep track of this. We'll see how things go going forward, and we'll adjust the numbers just so we can kind of see how things progress. But right now, I would think they would be kind of fairly valued at that point with a 20 PE ratio on them between $51.69 if Bitcoin goes up to 180,000 and 286,000, right? So that's kind of what we're looking at. I think 180,000 is more doable than like the 286,000. But with the spot Bitcoin ETF, things are unknown depending on how much money gets plowed into the spot Bitcoin ETFs, everything else. This could have a huge impact on it. Also, the multiples we've seen in the past cycle, some we're getting like 35, 40 multiple. So this, I'm guessing, is kind of conservative numbers. Some people have also said that, they're looking for Cleanspark to only get to like 13, 15 or something like that. I think that's just way too low based on the halving cycle that we had last time. Now, things could change, right? So that's why I said, not financial advice. You guys need to do your own research on this. But this is kind of what I'm going off as the previous cycle that we saw with the miners. If this happens again, I'm still only going, this would be like a basically 11x increase for Cleanspark, right? Last time we saw Marathon, others get above that, way above that, but that was all the way from the bottom. So if we look at the bottom of Cleanspark, where they bottomed out at what, $1 something, getting it. So let's say $2. Let's say they get to 60. That would be like a 30x increase from the bottom, right? So I think that's still doable for that. All right, but let me know what you guys think of this. Obviously, a little bit disappointing here on the numbers that we got, but I understand that they plowed everything into it in the end of the quarter here, and then hopefully they can be all fresh going forward with the next quarter that we're currently in, which they're going to be reporting in February, I believe. Okay, but my game plan is if the stock drops down to another $4 or $3 and change, whatever it might be, I'm possibly going to pick up some more, right? As long as it stays down that way and they continue to execute on their growth, which I think they will, I have no qualms putting more money into the shares, because I do believe that they eventually, sometime in 2024 or 2025, we will have a nice rally in Bitcoin and the miners themselves. But that's just me. Let me know if you guys agree or disagree with that. Thank you so much for joining. Thank you so much for watching. I hope you guys have a great one. Spreadsheets are going to be available to my Patreon members as always, and those are still $5 a month, unless somebody drops out from the $4 a month tier, and those become available to you guys as well. So you guys can get on those, and then if you buy, I think, the full 12 months worth, you get a 10% discount on top of it. Okay? So that is it. Thank you so much. I'll see you guys in the next one. We'll see what happens tomorrow. Until then, bye.